It's Tuesday, 10th of October 2017. This is Paul Hardingham from paulhardingham.com. I saw someone, a friend of mine, post on Facebook earlier today, should he keep Bitcoin cash or transfer it back to Bitcoin? It's a notoriously difficult question pretty much on any cryptocurrency. Should you be in Bitcoin or should you be in another cryptocurrency? So the Bitcoin cash, I thought I'd do a quick video. This is not investment advice, it's just drawing out a few pointers, a few ideas, possibly. Now, Bitcoin Cash at this stage is still a relatively new, I'm going to call it, invention, whereas Bitcoin obviously has been around for quite some time. And I believe the main purpose of Bitcoin Cash was to solve scalability issues plus also transactional confirmation times. Originally, Bitcoin Cash was looking good for the Chinese market and for the Asian market. And this is the chart here. What we've got on the green line is the price relative to the US dollar, and on the orange line is the price relative to Bitcoin. So a couple of things to look at here and note. Obviously we've also got the volume down here on the lower part of the chart, and we can see there's a big increase in volume around about the 18th of August. Now, I'm not going to look back at the notes, but I suspect 18th of August when it became acceptable on some of the bigger exchanges to be able to trade someone's Bitcoin into Bitcoin Cash, and there's a big boost, and then the volume decreased and the volume fell away. The volume increased here a bit, that reflected in the US dollar price, but not much against the Bitcoin price. Essentially, there would have been an increase in Bitcoin price, which would have also reflected in the interest in Bitcoin Cash, partly due to an ignorance, I guess, within the markets. A lot of people thinking Bitcoin Cash is the same as Bitcoin, and so on. And then we had another increase in volume just here, September 20th, but they were nowhere near as high as the volume as the initial spurt of interest, which took the price from dollar-wise at $300 up to a peak of around about $900. So it tripled in price there between the 19th and 17th. So people there were looking for some very good profits, and naturally there are going to be a lot of profit takers there, having tripled their money. Anyone who bought in at this price down here on the 16th, 17th of August would be very tempted, having tripled their money, to sell. So you get this downward shift in price there. Other people thinking, well, I missed that, they didn't get in there, and they're thinking, right, this is a good time to buy back in. They then have an increase in price there. That allows those who are thinking, oh, I should have sold here, I should have sold but didn't sell at this higher point, price bounce back up, and the sellers again win and the price comes back down. And overall, personally, it's just my personal view, I would say this is not a good looking technical chart for Bitcoin Cash. Purely from the chart, it would indicate the psychology of the buyers and sellers, that the sellers are winning. The buyers, remember, there won't be that many, won't be that many buyers. There'll be a good number of buyers initially, but if all these people are now out of the market, which is what it would suggest, because we're now back at the price that it was offered at a few months back, then these people, if they'd seen that and lost that, as indeed my friend on Facebook is saying, should I stay in BCH or should I convert it back to Bitcoin? If you look purely at the Bitcoin price relative to Bitcoin, the orange line, then it's been overwhelmingly under performing Bitcoin itself. Bitcoin is the original. Bitcoin is still seen by many as the gold of the commodities market. You know, gold will always be gold and will always have that magical feel to it. And I think the same may be being suggested by this chart here for Bitcoin Cash. And indeed, if popularity really falls out of Bitcoin Cash, then that's going to take a real uphill struggle to prove itself as a worthwhile commodity, should we call it. And so that may take some time, if ever, to come back. That again is only my personal opinion. This is not financial advice. This is just purely how I'm reading the charts there on Bitcoin Cash. So in short, my answer would be, and again it depends when you got into Bitcoin Cash, but personally I would have moved out, and I have moved out of Bitcoin Cash. I did quite some time ago now, put it back into Bitcoin and other cryptocurrencies as well. Obviously, you've got to base that decision on where you entered the price, where you're happy to exit, where it could go potentially from here. Would you kick yourself if you exited today and then over the next 2 weeks it went and tripled in price again? Because one thing is guaranteed: as soon as you exit a market, that market won't just stay still forever. You're either going to feel that you've won or you've lost on your trading decision. And so much about trading is based on psychology. So you make a decision and you must never have regrets. You make a decision based on the information you have at the time, which is what I'm doing or advising here for you. Not advising, I don't want to get caught saying I'm giving advice. But you know, looking at that trend, that is a distinct downward trend. Why would that change? So I would sell. Now, one other tip I would always give in trading any form of things, whether it's cryptocurrencies or stocks, shares, foreign currency, foreign exchange, whatever, would always have a stop loss. Because if you don't work with a stop loss, you'll find yourself getting a worse and worse scenario. Imagine the price comes down even further, You're then thinking, should I get some more? It's even cheaper. It's got to come back at some point. Or do I sell now? I've taken even bigger loss. And what people tend to do in that situation, they write it off and they lose everything. So never get caught in a position without a stop loss. Always know when you enter a particular commodity, a currency, a cryptocurrency, set your stop loss. Might be 25%, 30% for volatile cryptocurrencies, might be 5% for a stock. You need to work that out as to what yourself is and set some rules. Once you've got the rules, you take the emotions out of the trading. You don't have to worry about your feelings about trading, and it's feelings that will hold you into a trade unnecessarily and can potentially cause you a total wipeout, which is not what you want. You want to always be in the game. So maybe you put your money back into cash for a while. That's absolutely fine. Then come back into Bitcoin, then put it into another cryptocurrency. It really does depend on your own psychological profile and what you're capable of withstanding, but I certainly recommend having rules to work with so you don't have to work out the psychological damage to you. Take yourself to a few scenarios. Don't always think, what if it goes up? What if I can make a fortune on this? Yes, there's a possibility in that, but do you want to have the opposite side of that, which is, I'll lose everything? Would you be happy about that as well? And the loser's fallacy, we tend to recover from losses far better than we recover from big gains mentally. So I hope you found this video useful. So this is Paul Hardingham from paulhardingham.com.